We have two interesting conversations today, I must tell you. Big stories in the world of business. You've heard of the Monetary Policy Committee holding rates. You've also heard of the rebased figure that's talking about the GDP that has put us at 3.13% high. But let's start with the Monetary Policy Committee of the Central Bank that have decided to maintain its current stance, leaving all key parameters unchanged. The committee retained the monetary policy rate at 27.5% alongside the asymmetric corridor around 500 plus 500 and 500 basis points. Let's take a listen to the central bank governor after that meeting yesterday.
The decision was premised on the need to sustain the momentum of disinflation and sufficiently contain price pressures. Members observed the uptick in month-on-month headline inflation, suggesting the persistence of underlying price pressures. The continued global uncertainties associated with the tariff wars and geopolitical tensions could further exacerbate supply chain disruption and exert pressure on the prices of imported items.
Well, let's get to the conversation very quickly. I have with me the Fellowship Directorate of the Institute of Professional Economists and Policy Management, Abuja, Mr. Dr. Yushau Aliu. Dr. Yushau Aliu, thank you so much. He joins me live from our Abuja studios. Good afternoon, Dr. Aliu. It's been a while, and thank you so much for coming on the show today.
Thank you very much. Thank you.
Yes, I think I should start by asking you, what were you expecting to be the outcome of that meeting? Many analysts already came up to say they expected the central bank to hold on to rates, considering the economic fundamentals are on ground. You know, but you are an economist. Let me understand what you expected and what you saw. How would you just oppose both of it?
The Monetary Policy Committee has done the best in recent times by halting the MPR and then halting all other parameters at the same rate existed before today. But if you are to understand some of the implications that has brought about the strengths and the weaknesses of this policy adjustment, we have to look at 365 days before today, meaning that the July meetings of 2024, that was 296 meeting of the MPC, which was held in the same banking headquarters in Abuja, when 50 basis points was adjusted in an attempt to control liquidity and to control inflation and establish the primary function of the bank, which is establishing a stable price regime that can assist both manufacturers, consumers, as well as government.
It's a good way to start the conversation, Dr. Aliu, but you would also agree with me that there are some concerns. Okay, now before we get to those concerns, what about other issues raised at that meeting? The central bank governor talked about stability in the banking industry. I'm happy to know that 8 of the banks have met the recapitalization requirements. That's a very good one, and that shows stability in our banking sector and our banking industry. How does that also come to you? And if the banks, it's so easy for them to meet up with this recapitalization requirements, what is expected of them moving forward, particularly supporting the real sector of the economy?
You know, President Bola Ahmed Tinubu is targeting a $1 trillion economy. And by targeting $1 trillion economy, you have to establish a good economic environment where investment will be flowing. Some of the strength that the CBN has succeeded in getting is stabilizing the foreign exchange. Before you speak about recapitalization, because recapitalization was an ongoing process, but now the recapitalization is as a result of targeting $1 trillion economy, which obviously the bank, we must appreciate the effort of the central bank and also applaud the 8 commercial banks that were able to beat the target even before the March deadline. However, 2 issues which I think we must be emphasizing in trying to analyze the MPC outcome of yesterday is that one fundamental issue that has brought stability, which is part of the trends, like I told you, there are a lot of several attempts that are non-monetary in nature, and there are attempts also that are monetary in nature. Unconventionally, the federal government was able to secure some of the production zones that is with the bandit, that is with the Boko Haram, and there is a lot of potential output. This is very significant as far as projecting the GDP for this country. That apart, the second angle, which is also very, very important and critical, is the rebasing exercise that was done by the Bureau of Statistics, where multiple of a basket of goods that has been adopted to widen the scope of the parameters in establishing the rebasing exercise. The rebasing exercise took place in between the last monetary MPC meeting of July 2024 and the MPC outcome of yesterday. So when you put all these trends and then you look at how investors are coming into the economy, and also you look at the capacity at which, remember I discussed with you about 2 years ago, the day Dangote commissioned his own refinery, and I told you that it's going to be a blessing. And today it has established that putting down over 50% of our import is a great achievement for Dangote, and also a great success and opportunity for the MPC to adjust this, to halt the monetary policy rate as it is. And that has been my own desire to have a halting situation so that investors can be stable, so that individual incomes can also be stable, so that the contribution of various components of the economy can also produce a result that can translate to adjustment in our GDP, which is required before the $1 trillion economy is achieved.
Another good one there. Let's look at our external reserves, which for me is also another form of stability. And I think that has also helped us in the stability of our currency, because before now we knew where our reserves were. But now at over $40.1 billion, according to the central bank governor, that seems to be a very commendable one. So moving forward, what sort of investments? Yes, we are attracting investments. The oil and gas industry. We are attracting investment to the financial space, fintech, and all of that. But what more? What sort of investment are you seeing? Talking about foreign direct investments now. I'm not talking about portfolio investments. We know the portfolio guys will come in, get into our stock market, get on it and all of that. But what more can we do? Talking about expanding FDIs coming into our country. What sort of investment policies should we be looking at?
Since we are able to succeed oil and gas, and the central bank governor has stressed the contribution of energy. So, but to me, what is more important about the pricing of energy, stability in the energy pricing, what is more important is the supply. If you check the supply function of energy, especially in respect to small and medium enterprises, you will agree with me that now we have a stable prices. What we need is additional supply. This additional supply will augment the capacity of the economy in the multiple sectors of the economy, which can be a multiplier. in generating more jobs and then creating more profit and then putting all our medium enterprises at a stable level for the opportunities that is about to be existed in the recapitalization exercise. But if we continue to explain and analyze the present situation, we must be commending the effort of the central bank. Especially, I am highly honored to meet the Director of Monetary Policy Committee, Dr. Umbo. These are guys who are ready, who are very sincere in bringing out policies that can shape the pricing regime that is going to be favorable both to the investors and also consumers. Because this has to be clear. If in the event of creating a window to have better production potentials, it is also equally important to consider. Remember in 2024, the last MPC, I am giving year-on-year assessment from the MPC of July last year to MPC July this year, there was no review of income of people in respect to minimum wage. But prior to that, even though the minimum wage is able to adjust the income of individuals, but is not enough. But what we are thinking, for people and consumers to regain their confidence, there is need for inflation to be controlled below double digit. It is important to know that no economy can have a desired prosperity once you have double-digit inflation. But at the same time, effort of the Bureau of Statistics, effort of the central bank, effort of other sectors of the economy, including the fiscal mobilization that is ongoing. I am sure before we look at the potential risks associated with the fiscal development which is about to translate in the near future, we have to also agree that if more potentials are put together in addressing the unemployment rate and also under production of many industries, like I said in the beginning, as a result of low supply of energy. This low supply of energy is causing a lot of losses to most of the investors because they have to augment. And in augmenting, you have to look at the cost, the variable cost associated to producing an item, so that the taste of you and I will remain Nigerian. What we consume, what we wear, what we try to mobilize has to do with our income and the price at which we are getting it at different intervals.
Another great one. Now, let's, while we look at the outlook, of course, there are tariff issues, that's global issues that we must also know that we are contending with. Doc, I want to ask you, Dr. Liu, what you also think and what impact do you think that would have? And my question will go directly this way. President Trump is talking about building America, bringing America back, buy America, build American economy. Some say it's an opportunity for Africa to also build Africa. Do you think it's an opportunity for us to take advantage of all of these tariff issues? Or what do you think is the impact of these tariff hikes on our imports and exports?
Domestically, we are well prepared to take any challenge, because the first challenge we are to take is to have $1 trillion economy, looking at the population size, looking at the market size. There is no reason why we should be lagging behind. And remember, the whole world is connected. No one is, and no nation is isolated. The development here means a lot to development in our sub-region, and also means development to the entire world. So, but we have to understand some of the intrigues of Trump tariffs. The Trump tariffs, and I particularly said that the central bank must also understood what the Trump tariff is doing, not to Nigerian economy, but other to trade partners of Nigeria and also to economic bloc that Nigeria belongs. Nigeria is now a member of BRICS. Trump is targeting all membership of BRICS. That is very significant and important, so that our monetary policy will be in line with our development purposes, and also will be a monetary policy that will guide and project more investment and project more consumption, which the economy is looking for. Remember, nobody can come and extend your GDP rate. It is your own contribution in monetary terms of all the commitment. So it is good. Trump let him be more American, but we are more Nigerian. And that is why I told you that the capacity, we have better capacity, because they have exhausted their capacity in terms of growth and development. And that is why they rush into tariff wars. We don't have to be part of tariff wars to grow our economy. Our economy has a lot of potential. We have different sectors that can perform better than others, but we have to make sure that all advantages, that all accruals that is coming to the economy is targeted at the right time, at the right place. Because fundamentally, one of the core issues that is disturbing development is for planners and policy makers to understand what to do, when to do, and how to do it.
Almost finally, inflation for this month is 22.22%. I think 3 months consecutively now we've had this decline. In your understanding and in your thoughts, it's a rebased CPI from the National Bureau of Statistics. Do you think that we are now at that point where we'll continue to see this constant drop in inflation as we move towards, this is the second half of the year already, as we move down through the end of the year?
Yes. Remember, the energy cost is declining. Remember, the PMS price is declining. Remember, there is stability as far as oil prices are concerned. So all the components that can assist us to reduce inflation, probably to a single digit, are there. But it has to be well coordinated. There is no way central bank is using all the monetary tools available to it in trying to control inflation. And at the same time, the sharing structure from the Revenue Mobilization, Allocation and Fiscal Commission, we graduated from sharing 560 billion monthly to 1.9 trillion naira monthly. This is a high liquidity. How are we using the liquidity? Why must this sharing formula continue? Because all the gains, politicians will be celebrating that they have additional resources. But the economy is looking at the direction you put those advantages. And that is why if we are to control inflation, we must make sure we look at this allocation by FAC and the distribution of this. That is in the one angle. The second angle, the potential risks associated with putting all the revenue generating agencies into Nigeria Revenue Service. There is also going to be an additional income to the economy. What do we do with that additional income? How efficient are we going to distribute them? And how efficient we are going to inject them? And how efficient we are going to translate those advantages to become a prosperity to government, a prosperity to investors, and a prosperity to citizens.
I think it's a good way to leave it. Let's see how it plays out. The next meeting is in September. We'll see if there will be any shift. Do you think there will be any in that meeting in September?
No. I'm not expecting a shift because the production, our agricultural production is coming at that particular period, and is going to the supply will increase, and if supply increase, the food inflation is expected to decline. And if it is declining, there is no reason why we increase the MPR just to incapacitate the potential investors who are ready to invest more. Let us sustain it as the bank is attempting to do. Let us also watch until when revenue improves and we see the behavior of improvement.
Dr. Ishaw Aliu, I must thank you so much. It's been a while we had you on the show, but it's really good to see you today. A fellowship doctorate of the Institute of Professional Economists and Policy Management in Abuja. Thank you so very much.
Thank you very much. So grateful.